What's up, guys? All right, we're going live tonight. We're talking real estate investing, mobile home park investing, and we're going to have a good time tonight. I had a kind of a long day, and I figured it'd be kind of fun to sit on the couch and hang out and talk shop with some folks. So if you're hopping on, jump over to mariodatillo.tv and watch it there. You're going to get the best live stream there, as well as I can see your chats. Your chat and comments over there a lot better too. mariodatillo.tv. Jump over there and you are going to be able to have a live discussion with me. If you're on Instagram, I may or may not see your chat just because I'm looking at multiple screens here. But yeah, so jump over to mariodatillo.tv, drop in the chat over there what questions you have about real estate investing. We can talk mobile home parks. We can talk commercial real estate. We can talk residential. Doesn't matter to me. Just chilling tonight. Got done with a workout earlier, and actually been doing some MMA, some Muay Thai, and just got my butt kicked a little bit today. So I figured let's hang out, let's relax, talk. Drop in the chat what you're doing for real estate, what you're investing in. Or what you want to invest in, and I would love to learn about what you're doing. Also would like to answer some questions for you, so drop that in the chat. If you are just hopping on, jump over to mariodatillo.tv where I can see your comments, your chat, and we can talk. I'll talk about anything you guys want to tonight, anything real estate related, but we can talk anything really. I don't even care. It doesn't have to be real estate. mariodatillo.tv, hit subscribe over there too, and drop in the chat, and let's talk real estate investing. Let's talk investing, business, whatever you guys want, entrepreneurship, whatever you guys want to talk about. Let's do it. Drop it in the comments over at mariodatillo.tv. Looks like I got a little bit of a snag on the connection. Give it a second and it'll boost up. Part of living in rural area is you just deal with the weak internet connection that kind of comes and goes. Hey guys, if you're just hopping on, go to mariodatillo.tv, drop your questions and comments in the chat over there so I can see it. I want to talk real estate with you. We are streaming on several platforms. YouTube is the main one, which is the mariodatillo.tv, LinkedIn, Facebook, Instagram, you name it. So drop it in the questions, drop your questions in the chat, and let's go. So let's get started here. I'm not going to make this a really long discussion tonight. So make sure to drop your stuff in the comments quickly and chat quickly, as well as where you're chiming in from and what you're investing. I'd love to hear that, as well as any other investing questions. Happy to answer them for you. So interesting. This week we had some really good interviews on the podcast that launches this month. Pretty excited about that. Mario Datillo show will probably launch third week of May, and I'm super impressed with the guests I've already had on the show. Actually had Dimitri Van Camp over in Belgium hop on with me yesterday. Was it yesterday? Yeah, yesterday. That was sweet. We talked a lot about negotiating. He's a phenomenal negotiator. He wholesales homes in the United States from Belgium. And we get into how he does that and all kinds of good stuff. And then also we talk a lot about negotiating strategies in that discussion. So I'm looking forward for that episode to come out. And previous to that, interviewed Javier Hinojo, which is pretty well-known investor, apartment guy. He invests in other things too, but he actually owns a jet. So we talk about how he bought that jet and kind of the mechanics behind it, the financial aspects behind it, and how you can actually make money buying jets. So not only is it a luxury, but he's doing pretty well with it. So that's pretty cool. We got into that discussion. And then I also interviewed Dave Seymour with Flipping Boston, the personality from Flipping Boston. And that was late last week. So I'm super pumped for that episode to come out. One of the funnest episodes I've ever done. Guy is absolutely hilarious. He has experience in keep forgetting to look over here to the left, But hey, guys, jump over to MarioDatillo.tv and watch it there on the YouTube channel. You'll get a better stream, and I can see your comments in the chat over there. Let me know what you guys are investing in, where you're based out of, and let me know if you got any questions about real estate too. I'd love to just talk shop with you. So anyways, my interview that I did with Dave Seymour with Flipping Boston will come out as well pretty soon. That was a lot of fun. Dude is hilarious. He's like a comedian the whole time, but he really brings some fun into the real estate and finance world that a lot of folks just don't have in our world. So that was a lot of fun. And tomorrow I'm interviewing Mike Fallett. So that's going to be pretty awesome. Mike is he's an all-around really great dude. He knows a ton of people. His network is phenomenal. He also owns a company that writes books for people. So yeah, you got that right. His company writes books for people who want to have a book out. So that's going to be a really interesting interview. I'm super pumped about that. He'll be, he's a fun guy, young guy, and just crushing it. So anyways, so that's some of the interviews that I got coming down the pipeline with the podcast that launches at the end of the month, or maybe third, fourth week of the month. We haven't nailed down an exact date, but anyways, been some great interviews. Jump over to MarioDatillo.tv, drop your questions in the chat, and let's talk real estate investing. I'm not going to be on this super late tonight, so do it sooner than later. Make sure to hit subscribe over there when you do. It's totally free. It's the YouTube channel. You'll get the best stream there as well. So, interesting. Last weekend, I was in North Carolina with some friends. We went to the horse races, the Queen's Cup. And that was, what's up, Mermaid Realtor? Over on Instagram. I've got multiple cameras going here right now. But jump over to MarioDatillo.tv, my YouTube channel, watch this live and chat with me so that we can talk some real estate investing. Anyways, so yeah, first horse race, it was a blast, and had just an awesome time with friends. Let's talk about acquisitions. Guys, I'm just waiting for you to start hitting me with some questions and drop stuff in the chat. Otherwise, I'm just going to talk about whatever the heck I feel like talking about. MarioDatillo.tv. Jump over there, put it in the chat. Let's talk real estate investing, entrepreneurship, whatever you guys want. Anyways, so going to Pittsburgh tomorrow, flying out tomorrow evening, going to be all day on site at a community that we're buying up there, and pretty pumped about that. We're doing kind of our final inspection before we close next week, and so been a good project. I'm excited to buy that. I'll kind of touch on that in a second. Giovanni, what's going on? Long time no talk. Glad you're back and participating. Giovanni said, hey, Mario, I made contact with some brokers and got some information to analyze in order to see if it is a good deal. What formulas should I run to see if it's a good deal? All right, so what I'm assuming is that Giovanni's talking about a mobile home park, just because there wasn't any clarification. So I'm just going to assume it's a mobile home park, which is probably the best thing to ask me about. So the things that you'd want, you said, what formulas should I run to see if it's a good deal? All right, so here's the back of the napkin calculation that I do whenever I'm looking at a new mobile home park. I need to know how many total occupied lots, meaning homes sitting on lots with people in them, okay? And then I take that times the lot rent, and I would start out by doing the lot rent. Okay, cool. So you said mobile home parks. Oh, 2 mobile home parks. All right. So let me start over. So basically what I would do is I would take the total occupied lots, meaning how many homes are sitting on lots with people in them paying. I would multiply that by the lot rent, okay? Then I would take that times 12. That's going to give me gross rent, okay, for the year. And then I'm going to take that times, well, it's going to depend. Let me pause you. Giovanni, let me know in the chat if it is who's paying the water and sewer and trash. If the tenant is paying the water and sewer especially, your expense ratio is going to be a little bit lower. If the park is paying for water and sewer, your expense ratio is going to be a little bit higher. So it's important to know that. So drop that in the chat and I will let you know kind of what expense ratio to use just back of the napkin. But let's just say that the tenants are paying the water and sewer. And I also don't know how many lots this is, but let's just assume, okay, yes, public sewer and water, but who is paying it? Is the tenant responsible for that water bill, either by meter or being billed back by the park? Or does the park pay the water for the residents? That's what I'm asking. So yes, that's good that it's public, but I need to know who's actually paying the bill for that water sewer. All right, so going back to what I was saying, so we've got that. Let me back up for anybody just hopping on. We're going to take the to value the mobile home park really quick to see if you've got a good deal or not. You are going to take the total occupied lots, homes sitting on lots with people paying, okay, times the lot rent in the park, times 12. That gives me gross rent, multiplied by, let's just say he said the tenant pays it. Okay, good. So in that case, I would multiply. And one other question for you: how large is the park? How large is the park? If it's probably 40 plus lots, occupied lots, you should be somewhere in the low 40% expense ratio, something like 42% expenses, let's just say. So in that case, I would take that gross potential rent times 0.58. That would give me a 42% expense ratio. So it's going to give me a net operating income. Okay. I know I'm kind of rambling here, but it's really simple. How many homes in the community that are paying times the lot rent times 12 times 0.58 to give you a 42% expense ratio. And that gives you your NOI, your net operating income. Okay. Divide that by a cap rate, or divide that by the price that they're asking, and that's going to give you the cap rate that they're wanting for that property. If you're 7+ cap going in, you probably need to pay close attention to that. Okay. This is assuming the property is stabilized. This is assuming that, it's running pretty well. If you got, a ton of vacant park-owned homes that need to be renovated and they need to be sold off and all that, it's going to get a lot more complex. But typically, if I just want to see back of the napkin, is it something I should be considering? That's the calculation I do. So unpriced, oh, that's even better. So, so in that case, I wouldn't waste my time. Honestly, I hate when brokers do that crap. I pretty much just tell them I'm not interested unless they can give me some pricing guidance. So what I'll do is, if I'm really interested in the park because it's near something that I already own, then what I'll do is I'll call that broker and I'll say, hey, look, I'm not going to make an offer on something unless I have a pretty good idea of where this seller is going to sell this property. So I need some pricing guidance. Otherwise, I'm not going to waste my time. And typically they'll kind of like, well, I think it's going to trade somewhere in the $4 million range or $3 million range or $5 million. They're going to tell you kind of roughly where they expect. Don't let that scare you off, because a lot of times they're going to throw out a number that's, is higher than they would probably accept. That being said, if it's listed with a broker and being publicly marketed, it's probably a waste of your time. Not saying you can't get deals done with listed properties, but most of the stuff I'm seeing on the market through brokers is a joke. It's just priced to the point where I don't know how anybody makes any money off of it. Hey guys, if you're jumping on mariodatillo.tv, jump over there, and if you chat with me over there, I'll be able to see your chat and we can talk. I want to make sure that I'm engaging with you. That's the whole reason I'm doing this, not to hear myself talk. So hit subscribe while you're over there too, and let's talk some shop. Let's talk mobile home park investing, real estate investing, entrepreneurship, business, whatever. Happy to help you get into real estate investing, or happy to help you scale it. I've been in it for 15 years and been around the block. Not bragging, just saying I've got some got some battle scars I've learned from. So I am streaming on a bunch of platforms here. Great question, Giovanni. And if you got anything else, I'd love to answer it. But just make sure that make sure you're not wasting your time with listed properties that are just unlisted or unpriced, I should say. Let me know how that goes, though. If you end up getting something under contract, I'd love to hear about it. Send me a message, drop a comment in one of my videos, and I'd love to kind of find out what you're working on. All right, guys, if you're just hopping on MarioDattilo.tv, jump over there, hit subscribe while you're at it, and let me know what questions you've got regarding mobile home park investing or real estate investing. I'm going to be on for maybe another 10 minutes or so, and I want to make sure that I get to your questions and talk shop with you. So jump over to MarioDattilo.tv, which is my YouTube channel. Chat with me there. All right. So like I was saying, I'm going to be in Pittsburgh starting tomorrow night. I'm going to be there all Friday and doing kind of final due diligence work, prepping for takeover on a community that we're buying up there, which I'm pretty excited about. It's been kind of a long haul. There are a bunch of surprises with the property, and we are finally through all that and moving forward to a closing next week. So pretty pumped about that. I'm not up north. I haven't been up north in a little while. I'm hoping it's a little warmer than what it was last time I was up there. So we will see. Pretty interesting. We just made several hires last week. We actually hired 4 people. We'll be hiring 4 new people in 2.5 weeks, which is a lot of new people. One leadership role. We've got a new administrative person joining the team. We also have a junior acquisition manager. We made that hire. He's on the team. We actually got him started today. And we actually have a new community manager starting next Monday as well. And I'm we're going to be hiring another community manager at the Pittsburgh community that we're buying up there. So lots of hiring lately. Seems like for a while there, we were just having trouble finding, good people and finding anybody to apply, really. It was just like a drought. And then all of a sudden, it just floodgates opened and just a bunch of good people came along. And we're just super blessed to be able to bring on some real A players to the team. Hey, Giovanni, he said, what is the best way to create your own manual list of parks to market to? I was thinking to reach out to mobile home distributors in the area and ask about the mobile home parks in the area. So that's a really good question. What Giovanni's talking about is how does he find mobile home park owners to then contact directly? Because we just talked about how sucky listed properties are with brokers. So the answer to that question is, well, it depends. There's several ways. So you can either buy a list of mobile home parks, and if that's the case, then you're still going to have to skip trace the owners. That's what I would recommend just from a time standpoint. You would want to either buy a list or create a list of all the properties, and then you're going to have to skip trace the owners. You can buy the list in a bunch of different places, but just remember, most lists are not going to have good contact information. You just need the addresses to the property. You just need to know who is where the property is, and then from there you can hire people. What's up, oh man, I can't even pronounce that. Babagala 2021. Welcome. Drop in the chat if you got any real estate investing or mobile home park investing questions. Let's talk. I'm on 4 different platforms right now. Jump over to MarioDattilo.tv to be able to chat with me. It's just my YouTube channel, totally free. Hit subscribe while you're there too. But then I can answer your questions as well. So anyways, so long story short, hey, what's up, Joe? Welcome, Joe the Realtor. Hit me with some questions on real estate investing, mobile home park investing. And you can jump over to MarioDattilo.tv, which is my YouTube channel, and chat with me live over there, and I can answer your questions. I'd love to hear where you're chiming in from and what you're investing in or what you want to invest in. So anyways, build the list, and you could just buy a list of mobile home park addresses, or you can go on Google if you really want to do it this way and just pick your market. If you're trying to be more like targeted, go on Google, type in mobile home parks, and it's going to pull up all these different pins where all the mobile home parks are. Now you got the addresses, throw them in a spreadsheet and get somebody to skip trace them for you. And you can do that. But I typically, you could, when you say mobile home distributors, I think you're talking about mobile home dealers. And yeah, you can network with them. They can maybe tell you about some park owners that might be struggling, or they're having a hard time selling their homes, or maybe they're just getting old. They might know some park owners that start talking about selling their park. So in that case, that's a great idea, man. I think the more guerrilla you can get about it, the more deals that you're going to find that nobody else is reaching. So like there's these different websites you can sign up for that supposedly have owners' contact information, but usually the information isn't really that accurate. And when it is, it's like that's who everybody's calling. So the best deals are found when you get a hold of somebody that nobody else has the phone number to, because it means their phone's not ringing 10 times a day. So just kind of get creative. I like that. You can work with movers, mobile home movers, to network with park owners. That's another way to do it. They may know probably more park owners than even the dealers do, just because they're moving the homes into the parks or out of the parks, and they're typically, doing business with the park owner there too. So not a bad idea. There's a lot of different ways, but I think the most important thing is that you don't just buy a list of phone numbers. You get the list of parks, and then you skip trace the owners and track down the contact information for those people. So hopefully I answered your question. But jump over to mariodatillo.tv and chat with me live over there. Oh, what's up, Christopher? Hitting me with the long questions. I love it. He's on LinkedIn, actually. I'm surprised I can see his comments. I'm surprised I can see your comments on LinkedIn. I thought I could only see the chat on YouTube. So cool. Christopher has a question. He said, what do you think the Fed's announcement today will do to cap rates within the next 6 months? In my experiences, prices don't immediately drop when rates increase, but there's a delayed response. But there's so much money chasing yield in this space right now that I'm not sure if rising rates will affect cap rates or not. What are your thoughts? Dude, you know what? I had that on my list of things to talk about. If somebody didn't have a question, I was going to bring that up. So I'm really glad that you brought it up. That being said, what did they raise it? Half point or something? I saw saw some press stuff coming out yesterday in preparation for the Fed announcement today. I didn't see the actual announcement, but what I heard is they were going to raise it a half point. And yeah, that's an aggressive hike. I mean, you see a quarter point hike, and everybody just kind of goes, I've kind of priced that in a little bit. You start moving up at 0.5% interest, 0.5% interest hike. People feel that, yeah. So 50 basis points. Yep. You're welcome, Giovanni. I don't know, man. I think what's going to happen is you will start to see a slowdown in purchases. I've seen more price reductions this week, in the last week or so, I should say, than I've seen in a long time on mobile home parks. And these are listed properties. Like I just saw one yesterday. They dropped the price $450,000. I mean, I've been seeing some pretty aggressive price decreases, and this isn't like mass hysteria, everybody's dropping, but I mean, for years I haven't seen price reductions on mobile home park listings in any volume. And so probably seen 3 or 4 in the last week. That's noticeable. And it's from brokers who just, I know they've been listing stuff at ridiculous prices, And hopefully they're getting the message that, look, stuff isn't going to move like it used to, and the prices that don't make any sense, people just aren't going to pay. So am I saying that we're going into a crazy price reduction mode? Not yet. I think a half point is that's going to change things. Like, give you an example, this deal that we're working right now that we're closing next week, the lender came in and renegotiated the terms kind of last minute with us, and they increased the rate by a half point on us. That was painful, but we could absorb it. If I had that same deal and they raised me a full point, that would really hurt. So I would have had to have probably either renegotiated the deal or just restructure things or whatever, and it would have made a difference. So I think people who have deals that have been, kind of dragging out due to either issues in due diligence or they're trying to resolve title issues, that may affect those deals. Now, are all of them going to blow up? No. Some will get renegotiated. Some people just eat it. But this is what I would tell you. This is what I would say, and you may agree with me. You may not, Christopher. You can't buy properties like people have been buying them at the cap rates they've been paying, with interest rates going up 1.5 points from what they were. You just can't. The numbers don't start to really not make sense. They didn't make sense before, but buying something at a 4 cap, 4.5 cap, I've seen stuff trade at, and now interest rates are at 5.5, let's say. They start hitting 6%. You're going to feel that. So I know I probably sound like I'm rambling because I don't know the answer to your question, to be honest. But I expect we will see some distress. We will see defaults. I'm confident of that. And I know what you said. I agree with you. There's so much capital chasing cash flow, but negative cash flow is no fun. Okay. And so I think what's going to happen is we're going to have a lot of these people who are idiots and paid just crazy prices. Not necessarily the large institutional guys, like the family offices. They have very low leverage, and a lot of these, the REITs, they have low leverage. But a lot of the newer guys that are getting in and just trying to buy things to buy them, and they bought them on short-term debt. So they may have, gotten a 2-year, 3-year bridge loan with low interest, interest only. And they expected that they're going to turn around the park and then refinance out. Well, some of those people maybe aren't getting the homes in as quickly as they expected because delays happen with ordering new homes, or for whatever reason, their business plan isn't working as well as they thought. They may have bought stuff thinking that mobile home park investing was easy because you just rent out the dirt and all of a sudden you got this easy cash flow, and they're realizing, hey, wait a minute, I'm buying a fairly management intense asset that I have to turn around and I have to actually know what I'm doing here. And they may have even been aggressive on their underwriting, their modeling, and their loan's going to come due, and they're not going to be able to refinance out of that thing at par because they overpaid. They got everything we just talked about. And, if cap rates tick up a little bit, value comes down. Now we got issues with loan to value. Debt service coverage ratio may not be that great at the higher interest rate. So all these things combined, it's definitely a recipe for pain. Okay. And so we may see some people selling with motivation here coming up in the next year or two. And I plan on buying those assets. So not to sound like cockier that I want to see anybody lose money or lose deals, but when a lot of people were not around in 2008. They did not know, they were not investing in real estate in 2008 or 2007, 2008, when the market tanked. And so they don't know what it's like to see lenders all pulling out of the market at once. They don't know what it's like for CMBS lenders to just shut down overnight. They haven't seen a lot of this stuff where everybody's running out of the market quickly. So they've always just been very aggressive in their pricing, and they just for me, I've always said you make your money when you buy, right? People will say, well, mobile home parks are such a great investment, or self-storage. I invest in self-storage too. And people are like, oh man, that's a money machine. Those are such great property types. So I go, yeah, they're profitable as long as you pay the right price. And so anything can be a good investment or a bad investment depending on the price you pay and the leverage you put on it. So I think, to answer your short question in a long-winded way, I think we'll see defaults. Does that mean that prices collapse? I don't know. You're right. There's a lot of money chasing deals right now. But I will tell you that when things start to look ugly, people do run. What's up, Explore Florida? Hit me with that. Jump over to mariodatillo.tv and chat with me live over there. Love to hear what you're looking to invest in or what you're investing in, or answer your questions about real estate investing and mobile home park investing. So, Christopher, it's people do run from the market when they start seeing things get ugly, when lenders start pulling out. It's like the water faucet shuts off. And so there will be people who go, oh crap, this is not good. And they step out, and that's a great opportunity for us. I mean, I remember the feeling buying homes in 2009. We were investing in single family homes in Florida in 2009. And I just remember the fear. People were like, what is going to happen? I mean, think about this. 2009, bottom of the market, pricing is like unbelievably cheap on these houses, well below construction costs, well below, what they'll ever be again. And nobody would touch them. People were afraid to buy houses. They wouldn't do anything. Lenders wouldn't lend on them. And we were buying homes, we were buying them as quickly as we could, but it was a different feeling then. People just didn't know what was going to happen. And so that uncertainty scares people out of the market, and that opens up the door for opportunity. And keep in mind, when lenders are defaulting, when borrowers are defaulting on loans, they tend to just try and get out as quickly as possible. They're not sitting there listing their property and waiting for multiple offers. They're taking offers, and they're just, if they can get out, they get out. And so I'm not saying, this is going to happen next week, but we're due for a pretty good correction. And I think with inflation kicking in too, we're not. So this is interesting. Dimitri and I had Dimitri Van Camp on my podcast yesterday. And this is one of the topics that we got into. It's like there's a delay on a lot of this. And you mentioned it actually in your comment, Christopher, that there is a delay. And in everything with economics, I mean, you do something today, you typically don't feel it for months later, or even sometimes over a year. And so what we are feeling is all the printing, all the freebies, all the subsidies that kicked in over COVID, and all the printing that they're doing right now. We're feeling the results of that slowly tick up now. And so where people were all about the, don't work, just get, free money from the government and give all the companies money. I mean, I remember during COVID saying, guys, you can't shut down the economy this long. We're going to pay for it. You are going to pay for this. All these subsidies that are happening, that's not free money. And what happens is we're starting to realize the inflation now, and it's really a tax on the middle class. It's a tax on the middle class and the middle to poor, okay? Because what's happening is they've got wages that they're living on, and their wages are getting weaker and weaker and weaker. They don't see it. It's like a silent tax that all the middle class people and poor people are getting taxed on. They just don't feel it yet, okay? But what happens is their dollar gets weaker and weaker, so they can buy less and less, but their income doesn't go up, right? It's not going to go up as fast as inflation is typically. So they get poorer and poorer and poorer, and then they start downsizing. Then they start, cutting back on their expenses, and that affects the economy pretty rapidly. When everybody stops, buying gas and doing all this stuff, that affects the overall economy. And I'm coming back around to kind of what we're talking about here, Christopher. But the ramifications of what happened before, or what we've done and what we continue to do with the QE and all that crap, is going to compound. Okay, so if inflation keeps ticking up even more, the Fed's going to have to keep raising interest rates. That's like one of the few levers that they actually have. And so if they keep increasing interest rates, that puts upward pressure on cap rates, meaning downward pressure on values, and it will make it less attractive to borrow money, which again has the downward effect on values. But when the economy starts to look ugly, people start losing jobs and all that stuff, people freak. They go, oh crap, real estate's not a great investment anymore. We've forgotten what it feels like to have a bad asset class, an asset class that people don't want to touch. And so it'll happen again. I have actually started to hear again that real estate values don't go down. It blows my mind when I hear that. And to me, it's like, you've forgotten, or you just weren't alive in 2008 when the market crashed. So, hey, Christopher, wow, you got such a long comment. It's covering up my face. Hey guys, jump over to MarioDattilo.tv, hit subscribe over there. It's free. It's my YouTube channel, and chat with me, just like Christopher and Giovanni and others are doing here. MarioDattilo.tv. I'm on 4 platforms right now. So Christopher said, and click subscribe over there, please. It'll notify you every time that I do more lives like this and put out other episodes. MarioDattilo.tv. It's free. You don't have to set up an account, just YouTube. All right. So Christopher said, I think 2023 to 2025, there will be very nice opportunities for acquisitions for experienced operators. And it goes back to your comment on people buying properties at ridiculous prices on a 3-year interest-only bridge loan. They closed in 2019 with a pro forma that had them adding 5 to 8 new homes a month, exactly. But the only folks getting that level of home allocation from the manufacturers are the OGs. That's right, the big boys, and in this space that have been around in the bad times too. Yeah, so you got to, great point. It takes time for those defaults to happen. And, some people will be able to get out, but some people won't. And so when they can't, then they try and negotiate with the bank, then it drags out, and you start to see that buildup happen. The way that I know that things are starting to get bad is I watch the non-performing loan markets. I watch the debt markets. And for years, there has not been any non-performing loans coming to market. And now within the last 6 months, I've started to see non-performing loans be sold by lending institutions. And that's a great sign. It was really post-COVID. So like right after COVID, I started seeing hotels, so hospitality, actually some apartment loans being sold, and obviously some office retail. But when you start to see that tells you that that borrowers are struggling and lenders want out because they don't want to take back the assets. And so as we see more loans come to market, the next step is, if those loans don't get bought, then they come back as REO, as foreclosures, right? So I watch those markets very closely to kind of gauge what the default rate is looking like. And so again, I'm seeing more defaults than I have in the past, which is a good sign. I would just say, you're right. Plus, people have figured in very high rent increases, which are great, and probably needed over the last few years. But we'll kind of see how things go. If inflation keeps going up, then rent increases are going to grow rapidly as well. So I don't know. It's a weird economy, weird situation. And what's funny is that people think that, or I get the feeling that people are kind of on cloud nine right now. Like they're not realizing where we sit and the risk that's out there. And so they're just like, cool, man, the economy's great. The politician on TV told me the economy's great, because what they're trying to do is pump us up, right? They want us to keep spending. They want us to be confident in the economy. And I think that will change. All it takes is one little thing to push us over the edge. And it's usually a black swan event nobody could predict. And that's what pushes us over the edge. And then we start going downhill. And, so yes, I agree with you, Christopher. We're kind of saying the same thing. The IO, the bridge debt, super aggressive performers, that's going to come back to bite them. And so I'm not trying to scare people out of investing in real estate, because I'm buying stuff as we speak. But I would say just be very cautious and recognize that interest rates are ticking up pretty rapidly. And so do your performas with some room. Expect the interest rate is going to be higher than what you're being quoted today, because that's just reality. I did not watch the Fed announcement today, so I really wish I would have. But I assume that they kind of gave some, and Christopher, if you're still there, why don't you drop in the chat if this is kind of what they were saying. I assume they gave some sort of gauge on how many more increases to expect this year, and at what pace and what increments. The Fed is really weird. They're kind of the most weird of all, because what they're always trying to do is like set expectations where they want you to expect and not where it's really going. So they're kind of always playing games with the public, and they're like, oh yeah, we're going to do, I mean, you saw what last year, they're like, oh yeah, we're going to jack up rates. And they did, and then they backed them back down to zero. Maybe was that last year? Yeah, I think it was last year. They started to raise them, and then they put it back to zero, and then, or they brought it back down, I should say. And now they're like, oh yeah, we're raising them again pretty rapidly, but they're doing it this time. So what's up, Dustin? Welcome. Jump over to mariodatillo.tv and chat with me over there. Let me know what you're investing in, what you're buying, or what you want to buy, and hit me with any mobile home park or real estate investing questions. That's just my YouTube channel, mariodatillo.tv. Jump over there so I can see your chat. Welcome to the live feed, mariodatillo.tv. Anyways, so yeah, man, I think you're 100% on point. It's gonna be interesting. All I can say is get your would you say so? A 75 basis, Christopher said, a 75 basis point increase is not something the committee is actively considering, Powell told reporters. If inflation comes down, we're not going to stop. We're just going to go down to 25 basis point increases. Holy crap. Yeah, so, I mean, still, shoot, 50 basis points that's a big jump. So if they're saying, yeah, if inflation comes down, we're not going to stop. We're just going to go down to 20. Wow. Yeah. So what's interesting with that is, again, they are trying to set expectations. They're trying to get investors to price things accordingly, whether they actually jack it up at that pace. So notice that they said they weren't considering 75 basis points, which is almost a full percent, almost a full percent. But they did say they're going to keep raising them at even a quarter point or 25 basis points, regardless, even if inflation does come down. So, I mean, to me, that's them telling us that rates are going up rapidly. You need to price that in accordingly. They're trying to get the markets to slow down. They're trying to get things to slow down so that you don't get to this huge peak and then do the stall in midair. They're trying to get expectations where they want them, and so pretty crazy. That's like you said. Christopher said biggest jump since 2000. Yeah, that's pretty insane. MarioDatillo.tv, jump over there, hit subscribe while you're over there. It's my YouTube channel, and chat with me live like Christopher and Giovanni and other people are doing right now. It's totally free. Just hit subscribe so you get notified whenever I do new episodes and new lives. But so anyways, we're talking about the economy. We're talking about interest rate hikes that happened today. And yeah, I kind of got the shivers there for a second. I'm like, wow. Or goosebumps, not shivers, goosebumps. And the fact that they're even mentioning 0.75 point increases, even though they're saying they're not considering it, it's kind of like planting seeds, right? They're kind of saying, hey, look, you haven't seen this yet because we're not considering it yet. But if interest rates, they're kind of hinting that, man, 0.5 point, that's pretty crazy. So anyways, great points, Christopher. I think we're going to see opportunity. So those of you who are making acquisitions, who are buying things right now, just be conservative. Don't buy stupid stuff. Just be conservative. That's all I can say. Buy things that cash flow. Buy things you can make money on. Don't buy things that are speculative. In addition to that, if you own assets right now, so we kind of talked about what inflation does. It's a silent tax against the middle class and against the poor. But what we didn't talk about is what it does to wealthy people. Okay, inflation makes wealthy people wealthier. Okay, because they own assets, and that's the difference between the wealthy, the middle class, and the poor. The poor typically live on government income. They get a lot of subsidies. So in that sense, they are kind of protected a little bit against inflation in that sense, because they're not working, they're not earning any money, or they're earning very little and they're getting a lot of subsidies. Where the middle class is working for their money, okay? And their wages are somewhat fixed. Wages typically aren't going to be able to keep up with rapid inflation. And so in that case, their income is staying the same. Their value, the power of their buying power of their money is going down, but they don't own any assets. So because they're sitting on cash, they've got savings. If they have savings, it's cash. And so it's getting weaker. Where wealthy people, what they do is they own assets. That by definition, your net worth is your assets minus your liabilities is your net worth, right? So most sophisticated investors, most wealthy individuals own assets, and those assets are going up in value right now. I mean, real estate, vintage cars, exotic cars, whatever, all that stuff, stocks are going up. Gold, silver, all that stuff is maintaining or increasing in value right now, where the middle class and the poor people are actually losing money. They just don't see it, which is why they're not freaking out yet. It's because the prices have been ticking up, but they aren't ticking up rapidly enough to where they're like, oh crap, I can't buy food today because it's went up that fast. So it's very slow and subtle, but when it starts to pick up pace, inflation can just wipe out people and can wipe out typically middle class to poor people. So it's just, you got to own assets. Oh, so what I was going to say is, if you own assets right now with debt on it, with a relatively short wick on it, meaning a short payoff period where you got to pay them off within the next couple of years, you need to seriously be considering about a refinance right now. Restructure the debt on it, get new debt, get a nice long runway, so that if things aren't real good when that loan comes due, well, let me rephrase that. So that, because if you've got short-term debt, let's say you've got 2 years left on a loan before it balloons, this is mostly commercial real estate, but even residential, you might have some hard money or something like that. If your loan comes due and lenders aren't lending, or they're lending at very high rates, you're screwed. And then you're one of the people that we're talking about here, right? So it's just important to look at all of your loans, look at all your debt, make sure that all of your mortgages are timed right and you've got the longest possible runway left on them. That is the negative thing about some of the institutional debt that has very fixed, due dates, meaning like with a local bank, you can kind of negotiate excuse me, even a regional bank, you can typically renegotiate your debt with them because they don't want to take it back. And if it's performing, what do they care? They'll just modify and extend, right? Well, with CMBS, with agency debt, even with some life companies, that payoff date is hard. Like there's no negotiating there. And on top of that, you have pretty high prepayment penalties to pay them off early. So that is the negative. I've got a fair amount of institutional debt like CMBS loans, some life company debt, stuff like that. But thankfully, we've got long enough time period on those loans where we're not too worried about it. And I'm doing multiple refis. I just refied a storage facility last week. We're working on refinancing a couple other mobile home parks that we have. So we're kind of locking in at these rates and just pushing out that payoff period as far as we can. So like give you an example, and Family Tree, I'm going to answer your question in 1 second here. Dustin, hang on 1 second. I just want to point something out. Get as long of a fixed period as you can, meaning if your lender offers you a 5-year, a 7-year, or a 10-year fixed rate, or either balloon or ARM, meaning you've got that much time where what your interest rate is going to be, take the longest term. Like for us, our lender, like we're doing a deal right now, and they're like, well, we can do 7 years if you want. I'm like, no, I want 10 years. And they're giving it to us. So, lock in those rates as long as you possibly can. You get a little bit higher rate on that, but it's worth it. Just lock in as long as you can. Don't be doing 3-year bank loans. Okay. That's a recipe for death. All right. So, hey, Mario, Dustin Whisks here. Love the content. I bought my first mobile home park about a year ago, under contract on my second, investing in Wisconsin currently. Hey man, congratulations. That's awesome, dude. Love it. And thank you for connecting into the YouTube channel. Hopefully you're subscribed. And that was my little plug. But anyways, I appreciate the feedback. I'm trying to put out content that's helping both new investors and experienced investors. So stick around. I'm going to keep coming out with more. So you're investing in Wisconsin, and I'm from Minnesota, actually, originally. I live in Southwest Florida. Now I live in Naples, but grew up in Minnesota, lived there my whole life. I've looked at several parks in Wisconsin, made offers on a bunch of them, haven't bought any there, but love Wisconsin, love the Midwest in general for investing. The South is pretty good too. I would say probably first would be the South, and then I'd say Midwest is probably second best. But I love Wisconsin, and congratulations on the second deal, man. That's awesome. Just be really conservative on your underwriting. Be careful with the financing. Get a long enough term loan, and rock and roll, baby. Make that money. If you're looking for any partners or something, hit me up. I'd love to team up with people and partner up and do deals together. So keep me in mind. So thank you for chiming in, man. Let me know if you got any questions or if I can help you with anything. I'd be curious, how many lots are you buying? How many lots is the park you own in Wisconsin now? And how many lots is the park you're buying? Just curious. All right. Hey, Christopher, the Wild are playing Lights Out right now. All right. I assume you're talking about, you said the Wild are playing. Oh, Lights Out right now. Yeah, got it. Okay, cool. You can tell I don't know what you mean by that. So that was like, oh, okay. Anyways, you might want to clarify that. Otherwise, if you're literally watching a Wild game, which I think that would be hockey, and hockey is over, I believe. I'm not a sports guy, but if you're watching the Wild game, Minnesota Wild game, then enjoy that. But I don't think that's what you meant. So yeah, just make sure that you guys have plenty of time on the debt. Got it. Dustin said, appreciate it. Thanks. Current park is 29 lots. Second park is 21 lots. That's awesome, dude. That's great. Oh, Minnesota hockey. All right. Okay. So yeah, so I was right when you said the Wild. Okay. Yeah. I'm from Minnesota, and you could tell I don't follow hockey because I Don't even know when when the season ends. But yeah, definitely from Minnesota originally. I escaped to a free state of Florida where I pay no income tax, have beautiful weather all year round, and it's the land of the free. So yeah. Anyways, let's see here. Playoffs. Oh, okay. All right. So Christopher said it is the playoffs. Sweet. So you meant you're getting off here to go watch that. I totally understand. I'm going to get off too here in about 30 seconds to a minute. So guys, thanks for hanging out with me. I had a lot of fun. Make sure you subscribe to the channel so that you get notified whenever I go live at mariodatillo.tv. It's the YouTube channel. If you got any last minute questions, I'm happy to answer them fast. Otherwise, I'm going to be hopping off as well. I'm going to chill because I got a super busy day tomorrow flying out to Pittsburgh. I've got an interview for my podcast I'm doing tomorrow, interviewing Mike Fallett, which will be super good. He owns a company that writes books for entrepreneurs and pretty much anybody, but I think most of his clients are entrepreneurs that want to write books. So that's going to be fun. I've got some final last minute things I'm doing for this deal that we're closing next week, and working on a refi as well. So pretty crazy. Hey guys, if you just hopped on mariodatillo.tv, watch it over there. I am going to be ending this here shortly, but if you got a last minute real estate investing question, or you want to just let me know where you're chiming in or what you're investing in, drop it in the chat so I can see it and I can respond. All right. So, hey guys, check out mariodatillo.tv. It's the YouTube channel, and also connect with me on all the social media platforms. I'm putting out different content on different platforms, and just trying to give you guys as much as I possibly can to help you in your real estate investing, especially mobile home parks, but other property types too. So Christopher said, happy I found this. Looking forward to the next Q&A. Cheers. And here's to your continued success. Hey, thanks, dude. I appreciate it. Thanks for being on here. It's been fun, and you had some really good questions and input. And I hope you'll join me again on the next one I do. I typically do 1 to 2 a week. So catch you guys later. Have an awesome night, and keep doing good deals, guys. Take care.